The emergence and growth of the Islamic finance industry is a phenomenon that has generated considerable interest in the financial world in recent years. And in keeping with this momentum, this week Nairobi hosted the second Gulf African Bank annual East and Central African Conference.
The purpose is to really share what has happened in the last 2 years on growth of this new form of banking and finance in Kenya, and share the experience of Africa also, because I think the African continent is ready for takeoff, and clearly Islamic finance is one of the vehicles which will help to meet its growth.
Initially, people were very skeptical about the possibilities of having Islamic banks succeed in this environment, but they are pleasantly surprised. Many regulators are participating in this conference, and Uganda and Tanzania and of course Kenya's regulators, and they all spoke very positively about the prospects of Islamic finance in this part of the world.
Kenya was the first country to introduce Islamic banking in the East and Central African region and currently has two fully fledged Sharia-compliant banks, that's Gulf African Bank and First Community Bank. Although they might control less than 1% of the banking sector's net assets, they have taken on in just 2 years of operation.
In 18 months, we were able to turn around the bank and make it profitable. Now we are looking to expand in the regional markets, including Uganda and Tanzania, but not limited to them. We are also looking at some other countries. So hopefully by the end of this year, we should be taking our footprints out of Kenya into the other African countries.
The success of Islamic banking came to the fore last year when it was largely sheltered from the global financial crisis which affected most conventional European and US banks.
To the extent that it's been less affected, it's probably because of the way the principles behind Islamic banking. It is their checks and balances in terms of the level of risk that is undertaken. Also, some of the more complex derivative transactions that were partly responsible for what was happening with the conventional system are not really a part of the Islamic banking system. There is limitations on the remunerations. There are Sharia boards and boards of the banks that control or have a say in terms of the overall operation of the bank. So there is checks and balances in the system that probably make them slightly more protected.
Islamic banking is growing at a rate of 10 to 15% per year, and with signs of consistent future growth, players are keen to introduce new Sharia-compliant products with new business areas such as mutual funds and takaful industry attracting a lot of attention.
The Kaful, which is the equivalent of Islamic insurance, is being discussed. That's one of the areas that we see to come in very quickly, because as an Islamic bank we need the Kaful as for our customers, and I think it's much more equitable, it's much more just, because in Takaful what happens is that when you put a premium, if there is a premium left over in the pool after if there are claims, that premium is returned back to the shareholder. So in a way, it's much better for people to go into the takaful way rather than conventional insurance.
These are modern products responding to modern needs of a consumer. So therefore, what happens is that if a person or an institution wants to offer Islamic services, they will ask Sharia scholars, can we offer this service? And Sharia scholar, most of the time, their role is to say no rather than define the product, because Islamic law permits everything except that which is forbidden by the book. So the sphere of permissible is very wide. The sphere of what is not permissible is narrow. So Sharia scholar will say, no, this will involve usury, or this will involve gambling, or this would involve that kind of activity which is prohibited by the Sharia. And then from that, individual efforts, we move to setting up of institutions and organizations which write standards which must be followed by the providers of the Islamic financial services.
In spite of the growth potential in Islamic banking, there are several challenges facing these institutions. These include finding skills in the field, conflict with central banks, and the absence of accounting and auditing standards pertinent to Islamic banks.
First, it's the acceptance of this form of banking. There's regulatory challenges. There's also the influx of capital that's needed for this form of banking to work. It is a business like every other business. It is for profit. So these are the key challenges, I would say, regulatory and backing.
Moving forward, the outlook seems positive for Islamic banking in Kenya. Customer bases are growing, and along with greater consumer awareness, the demand will likely grow in tandem.